so the company is Americo, like America, but with an O. Americo Cashback Option 100. So it's all of your money back. It's like, I call it the 100% plan. You have 100% death benefit no matter how you die. All of the major causes. 100% living benefits that I talked about from day one, you have access to the death benefit. You can add 100% of the death benefit in additional death benefit, accidental death benefit. So like 100K, or in your case, 300K could become 600K if you die of an accident, right? And then it's 100% cash back. So 100, 100, 100 right across the board. You can't escape value, and let me show you why. Hi, everybody. This is Brad Allen with Family First Life Emerald City, and I'm joined today by
John Lowry. I'm with FFL Crossroads.
And we're going to talk about why the Americo CBO 100 makes so much sense. So John's sitting in with me today to basically take the place of a client that I sat with a week ago. So this actually happened. We're just recreating it for you to let you know the power of the Americo CBO 100. So here we go. Hey, John, thank you for meeting with me today.
Hi, Brad. Nice to meet you.
And so here's my business card. What I do is on the front, and who I do it with is on the back. So today is mortgage protection coverage. So I'm looking at the request that you had sent in. It says here you're 57.
That's correct.
And that you took out 300,000. And you're at 123 Main Street in Mesa, Arizona, also a non-smoker, and you have no major medical, so like no heart attack, stroke, cancer, diabetes.
Knock on wood, no medications, feeling good.
Right on, man. Okay, so like it says on the form, here, in the event of your death or disability, the money keeps moving into the house so that we hold on to the equity in the house. So if not keeping the payments going, perhaps even paying it off. Okay, we're going to find out here in a second what makes sense for you.
Okay.
And I'm not a big pressure guy. I mean, if it makes sense, do it. We can do it right here. If it doesn't, don't. Okay, this has to make sense for you. Is that fair?
Yep.
Okay, so my process is really simple. So I'm just going to go over some numbers with you, what you have, and then what you can qualify for. So you ready? All right,
Yep.
Here we go. So after-tax monthly income, approximate monthly income net.
About 10,000.
About 10K. Okay, and then your mortgage payment, how much is that?
On that amount?
228?
Yeah, I think it's right around 2,750, 2,800.
Okay, all right. And then utilities, I know we've got hot months here and hotter months here. So, I mean, the average is usually between 400 and 500. I mean, dude, I've been in thousands of houses here. It's usually in that range.
Yeah, I run anywhere from about 425 is
Gotcha.
my average.
All right, 425 it is. Do you have a car payment?
I do.
Okay, how much is that?
And I'm paying 530.
530. And then insurance on the cars?
Yeah, I pay that as well. So between all of it, about 150 a month.
150. All right. And then any credit card debt?
I have no credit card debt.
Nice. Love that. That's your expensive money. And then food. How many people are in the house?
There's 3 of us.
So 3. So about 400 a month for food?
I'd say about 5.
About 500? Well, I want to eat at your house. Cell phone. Everybody's got a cell phone.
Oh, yeah. Yeah, 200 a month.
200 a month. Okay. And then any friends, family, church, any monthly charitable givings?
Church, we got about 500 a month.
About 500. All right. So 10, 8, 72, 68, 63, 6, 55. So you've got about $5,000 after you pay your bills, give or take. Does that sound about right?
Man.
Yeah, it's like, I don't know where that money is,
that
right? I hear that all the time. Well, there could be some one-time bills, but those are typically the reoccurring bills I see in most of the families that I sit with. All right, so John, tell me, are you a saver? What's like an average bank balance, checking, savings, all-in household? Any given Tuesday you look in the bank, what do you normally see?
I usually see somewhere around 40 to 45,000 is what
Okay.
kind of in there.
Great. Yep. That's great. You know, you'd be shocked. Most families, it's like the number that I circle, like the discretionary income is typically what's in the bank, if even that. We're really not much of a nation of savers. So you're doing well. That's my point. Let me ask you this. So next section, anything that looks or acts like insurance that could pay off your bank note in the event of your death, like a 401k or an IRA?
Got a small IRA.
Okay, approximate value.
Maybe 25,000.
Gotcha. Okay, so it wouldn't pay off your loan.
No.
Do you own any life insurance outside of work? Do you own a policy of your own?
No.
Okay, so that the market goes up more than it goes down. Like 73% of the time it goes up. We're actually going down right now. But look at it this way, you're buying shares at a lower price, so you're getting more of, I would just hang in there. 25K is not going to pay off your bank note.
No.
All right, so tell me, how's your health? Any meds, any medical conditions?
No, I'm, knock on wood, really healthy.
Super healthy guy, A+. Love that.
A+, couple surgeries, knee surgery and Achilles, that's it.
I love that. Those won't even show up. So there's 3 things that are in a house, and there's 3 things that I can do. So there's property and casualty, fires and floods, homeowners, right? You should have that. Yep. I don't do that. And then there's PMI, right? That's private mortgage insurance. That's the bank protecting the bank. They don't trust your credit score and or down payment. I don't do you have PMI?
I did not have to have PMI.
Oh, you're a lucky guy. So, I was in banking for years. Nobody wants PMI. As soon as you can get out from PMI, you do. And then there's me. I do mortgage protection life insurance. So I protect the people. Like I said when we started, in the event of your death or disability, money will move to hold on to your assets. Right? Okay. How much equity do you think you have in your place?
My house, really about 50%, about 350, pretty close to right on the number.
Nice. So think of it that way. You don't want to let that equity go back to strangers. You want to keep that in your family. I mean, most people do, right? They've waited, they saved, this is their family home. They don't want that equity going back to strangers. So that's what we're doing today. So those are the 3 things. I do the most important one. I protect people. And then there's 3 ways I can protect you. There's term, right? 10, 20, 30-year term. Either you die in the term or you don't.
Right.
Okay, term has no cash. The guidelines are strict because the death benefits are high. But if you don't die in the term, you had peace of mind, but that's about it, right? Okay. If you add return of premium, that means at the end of the term you get your money back. Well, now it has cash.
Like all of the money back? Or?
Every dime. There's no interest, but your bank account, your 45K, that has basically no interest too. I mean, it's like 0.001, right? It's kind of like a coffee can in the backyard with FDIC written on it. There's not a lot of interest there. So, but with return to premium, it's like it was free. You had that coverage for that term, and if you didn't die, then it was essentially a savings account, right? With a death and a disability attachment to that savings account. When as soon as you add money, like a return of premium to a term, it becomes universal. That's the second kind of policy. So universals are either going to give you your money back or they're never going to end as long as you keep them funded. They'll take you out to end of life, like age 100, 120. So have you ever had a W-2 job?
Oh, yeah.
Okay, so you notice like in the fall, usually October, November, they say, hey, John, it's annual renewal of benefits time. Everybody update your benefits. Right. So those are group universal. They're 1-year terms.
Right.
So if you own a 1-year term, every year it checks in, the market's up, the index is up, the cash value is up. So it's got death, disability, cash value without taxation, and it's permanent.
Okay.
So those are, I have 4 of those personally. And we're about to say, I'm a little older than you, but I've got 4 of those. So
Gotcha.
you're still a young man to me. So universal life is definitely the way to go. And then there's whole life. There's only 3. And whole life is for your whole life.
Right.
And that's typically for people that are not quite as healthy as you. The death benefits are lower. The underwriting guidelines are more relaxed. Like you could have cancer as long as it's a couple of years ago and you get in day 1 level coverage, but it's going to go up to like 40, 50K. That's it.
And that's max.
It wouldn't pay. I could stack them, but then it starts getting really expensive. So in my opinion, if we can find something that makes sense for you, that can manage your risk with maximum value, that's the way that I would go. And most families that I sit with, it's like, what do you make? What do you spend? What's left over? Find something for like 10, 15% of that number, and then just get the most value possible. So if I showed you a plan that had 100% death benefit no matter how you die. So there's natural, homicide, suicide, accident. So it covers all of the major causes of death, okay? And it also has 100% living benefits. Now there's 3 living benefits. There's critical illness, there's chronic illness, and then there's terminal illness. So critical illness is if you have a heart attack, stroke, cancer, Lou Gehrig's disease, ALS, not dead.
Okay.
You can, with the doctor's note, you can access the death benefits while you're still alive. So it's not just for a beneficiary, you're dead. It's for you, the insured, if you like stroke out, not dead, can't work, watching your assets dwindle. No, don't do that. Drain your policy, not your bank account. Does that make sense?
That makes sense.
Okay, so from day one, 100% access to the death benefit, and it's from $25K all the way up to $450. So it would definitely cover the balance of your bank note, but the more you get, the more it costs, and I will not put you outside your budget, okay? So critical illness is heart attack, stroke, cancer, ALS. Chronic is if over a 90-day period, if for 90 days you can't do 2 of the 6 daily activities, feeding, bathing, clothing, medicating, moving, toileting. Feeding, bathing, clothing, medicating, moving, toileting. Any 2 of those 90 days, doctor's note, then you're chronically ill. So like car crash, not dead, traction, can't scratch your back, can't feed yourself, you need help and it lasts 90 days, same thing. You can access your death benefits. Okay. And then terminal illness, it's your dead man walking. You know, either like go kiss the Blarney Stone or go see a better doctor, you're dead. Right? I've seen people actually outlive a 6-month diagnosis and live 6 years. One guy, he actually walked his daughter down the aisle and he watched her graduate college. He's dead, but she's not, and she has those memories for the rest of her life because he outlived a 6-month diagnosis living 6 years. Living benefits are a monster deal. I mean, it's a big deal. So 100% death, 100% living. You can double the death benefit in accidental death benefit coverage. So at your age, my age, we're over 45.
Yeah.
Up to the age of 45, number 1 cause of death is accidental death. The CDC tracks how and when people die by age and gender. And we're both over 45, so it's number 3. Number 1's cancer. Number 2 is heart attack and stroke. They tie for second. Number 3 is accidents. So accidents cheap and legit. And where we live, you see that Rafi guy's face everywhere, billboards, bus stops, right? He's making bank for a reason because people die accidental deaths. Matter of fact, Maricopa County, we're number 1 in the U.S. for head-on collisions going the wrong way on a freeway on-ramp. I'm not making this up. You can Google it. So I always add accidental. And by the way, I have 6 policies. I have this one. Okay, so I'm not talking about something I don't understand. I actually own this one myself. And then here's probably the best living benefit. It's 100% cash back. So you get to the end, not dead, you didn't pay for it, okay? So you will be 77, God willing. The average male dies between 76 and 78, so it puts you right there, right in the middle of the mortality table from the CDC. And if you outlive that, you know, it's kind of romantic to be young and broke. It's not super romantic to be old and broke. Knowing that you've got money coming back to you in the, you know, your mid to late 70s, that's a happy day.
So you're looking at 100% money back. So
all of it.
So I guess what amount are we talking? You said
okay.
10 to 15. What does that look like?
All right. So here's where I think it makes the most sense. So I'm going to pull up a quote here. So the company is Americo, like America, but with an O. Americo Cashback Option 100. So it's all of your money back. It's like, I call it the 100% plan. You have 100% death benefit no matter how you die. All of the major causes. 100% living benefits that I talked about from day one, you have access to the death benefit. You can add 100% of the death benefit in additional death benefit, accidental death benefit. So like 100K, or in your case, 300K could become 600K if you die of an accident, right? And then it's 100% cash back. So 100, 100, 100 right across the board. You can't escape value, and let me show you why.
You said it's 20 years.
This is a 20-year term, yeah. If I could have seen you when you were 55, I could have done a 30, a 25, but when you turn 56, your only option is 20.
Gotcha. Okay.
And they don't even offer this after age 60 because you're getting too old. right?
Perfect.
So you're actually kind of in the zone.
That's what my wife said.
Right? I love that. And of course, the younger you are, the cheaper things are, but you're as young as you're going to be. You're as insurable as you're going to be. So if I look at this, the Americo CBO 100, quote.americo.com, it's $1,103 per month, $1,103.75. Now, if we do the math and we look at $1,103.75 times 12 times the 20-year term, it comes out to $264,900. So let's say you live 19 years, 11 months, 30 days. Tomorrow I get my 265, boom, dead. No matter how you die, the last day. I mean, you either die in the term day one, you may pay $1,100 and somebody gets $300K. I don't know. I mean, life will happen, but the most you will pay, because it's flat, it doesn't go up, it's a flat premium level, it's going to be $264,900. If you die the last day before you get your money back, your beneficiary would be $35,100 to the good. Worst case.
So so we're talking 20 years. So on my mortgage, I've got 25 years.
Right.
So literally, I could
pay off your house.
Pay off the house early.
People do that all the time. When people are in a 30-year term, 30-year banknote, right. I say just make half payments every 2 weeks, and that'll shave like 7 or 8 years off the life of your loan. So you'll have 2 to 3 years left on your 30-year loan. When your 20-year return of premium policy comes back, God willing, pay off your banknote 10 years early. I mean, aren't you glad that we sat down today? Because I'm saving you like 10 years sometimes of house payments.
Okay, so what happens, let's say I'm able to pay off the house early.
Right.
And I don't need the coverage at 20 years. What if it's 18 years?
Absolutely. So it's not attached to the house. It's attached to you.
Okay.
It's an asset. And so you're an estate, right? So you have assets and liabilities. What you owe the bank is liability.
Right.
This is an asset that day one covers it. And if you didn't need this policy to protect your loan to the bank, you just redirect that asset to something else. I mean, because think about this. If you survive cancer in your early 70s, dude, that's really expensive.
Right.
Knowing you have $300K of access to pay for those kinds of things, that's a big deal, right?
Right. So, and you're saying a little over $1,000 a month.
Yeah. And so, like I said, I have 6 policies. So I already jumped on this because I know no matter how you slice it, you win. I mean, even if you die the last day, you'd be dead. But your family, your estate, would be $35K to the good, and that's worst case. Live one more day and you didn't even pay for it. You're just walking into your retirement golden years sitting on $265,000, and your house is now paid off. Now it's just like, here we come Bermuda. I mean, whatever.
So any limitations? Sounds awful. Too good to be
It's
true.
kind of a cake and eat it too product, right? So it's not just blood and urine and we'll just have to wait 3 or 4 months to figure it out. It's like right while we're sitting here. And they don't let everybody in. I mean, that's why I asked the health questions up front, but it's both lifestyle and health. So like, you can't be a student pilot. You can't be a cave diver. You can't be a drug dealer, right? I mean, they want to know, are you like sketchy? Do you have a record? So if you're like squeaky clean, no medical stuff going on in medications in the past, I mean, we'll find out while we're sitting here. It takes me about 5 minutes to find out. But if they let you in, it's like getting on the right side of that velvet rope into that club you always wanted to get into. They can't kick you out, dude. I mean, just don't miss your payment and they can't kick you out. They assume all of your risks that I talked about. Just don't miss your payment and just live 20 years. And it's the best savings account you would ever come across, because your savings account now has no death and no disability. This has $300K of it.
Wow.
Yeah. So just go ahead and grab your ID and then I'll get set up here. And it takes me about 2 minutes to figure out if we can get through the first hurdle, because there's 3 hurdles. First, they look in the MIB, and Millimans and Telescript. If we get through that, then we find out if you're telling me the truth about whether you've got the squeaky clean lifestyle and you can answer the questions. And then they pull a premium, and as soon as that happens, you're insured. And then just go live a happy, clean, healthy life and don't worry about this stuff anymore.
Wow.
Yeah.
Well, yeah, I mean, that, to me, it makes a lot of sense. Why wouldn't I do this? You know, for the cash back. I love the idea of paying my house off early, and if something would happen, I'd want my wife to stay in the house. I mean, it makes...
You're no different than I am. You're just a little bit younger, but I mean, I got this one a couple years ago, and of the 6 policies I have, there's 0 chance of me ever canceling this, because and I did the 30 year. If I make it to age 85, I get 180 grand back. And I'll tell you what, when I have pneumonia, if I have pneumonia at age 83, no way am I letting that take me down, because I got 180,000 reasons to outlive pneumonia and get my money back when I'm 85. I'm already spending that money, and I'm only 60. So anyway, all right, so here's your ID, and we'll go ahead and start the application. And then we either find out if you're in or you're not in, but the application's really easy to write. So that's the end of the mock presentation for how to tee up the value and explain why a CBO 100 from Americo makes so much sense, because no matter how you slice it, you win.
No, yeah, it's a very powerful product. When you talk about people that are getting into mortgages, even at older ages,
right?
They have a 25 to 30 year mortgage, and maybe they're not savers. They're in the 1 to 2% savings rate,
right?
If that for Americans.
Yeah.
Now you've got the opportunity to protect it, very little cost, and then the real codicil behind it I love is, hey, we're going to pay off your house early 4 to 5 years.
Right.
When you can show them in an amortization schedule,
right,
how much interest that saves them.
Oh, for sure. And I actually did run this appointment a week ago. And it was with a 57-year-old guy locally, and we got to the point right at the end. He's like, this is just like a savings account. Does everybody know about this? And I said, well, everybody that I sit in front of that looks just like you with these kinds of numbers, oh yeah, of course they do, because I've not seen a policy, and I've seen a lot, I've not seen one with more value. No matter how you slice it, you win.
Right. Yeah.
Yep.
And that's where people, I think, insurance, the protection piece that is we're out educating, is when you sit down and the verbiage you use. I know I use some things, there's only 2 things that buy you insurance. It's going to be your age. I can't make you younger.
Right.
And it's going to be your health.
Yep.
And if we can qualify for this, let's take advantage of it today.
Right. And the other thing that I would say for the people watching this is, don't be afraid of big numbers. So maybe it's a big number to you, but it's not about you. It's about the people that you're sitting in front of. So it's just trust the process, go through the financial inventory, and if you keep people within 10 to 15% of their discretionary budget, now we went a little bit over on your discretionary budget here. We were right around, 20%. But you saw the huge value, and so unless I see that look in your eyes that you're like, no, dude, I'm okay at 20% of my discretionary because I see this actually protects my family. It's $265K coming back to me when I'm 77. No, we're good. But if I don't see that look in your eye, right, then I say you make 10K, you spend 5K. Our budget's 500 to 750. Because if I put you outside that 10 to 15% range, now I'm looking at like a higher chargeback ratio. And I've been here 4 years, and 93% of my policies stay on the books because I don't put people outside a budget. That's just so important. Most people are buying on price until they're not.
Absolutely. And I think new agents sell for value, where the value of this outweighs the cost, plus income-wise. I'm not pushing that out there where I'm taking that last cent where we have a $10,000 discretionary.
Yep.
Where can I afford $1,000? Yes.
Yes.
Absolutely. I can fit that in. I know that. And selling on value much more than price is going to take you a long way into getting clients to not be afraid of those numbers. New agents are afraid of seeing those big numbers. Oh, they're never going to look at 300. Never.
Right. Yep. It's not about what you're comfortable with. It's about the client. And when value exceeds price, people act. Keep it simple. Confused people don't buy. And that's pretty much it. Anything else, John?
No. Love the presentation. I like how you write, don't get caught up in just, putting these printouts. I love how you do this on paper. To me, it's real.
Yeah.
And again, sell on value, great product. Thanks for Americo for letting us have that opportunity to use it.
100%. Thanks,
right.
John.
Thanks.